Discussion forward. Chakri Lokapriya is back with us on the show. Chakri, good morning. Straight point. How do you think the street would read all this commentary and the performance? How much of a slam dunk? Or do you think there would be willing takers for IT stocks on declines?
Good morning, Ajay. Thanks for having me. If you look at the numbers, they are a small miss for TCS and HCL Technologies. But the companies, again, both the companies are trading at close to their trough multiples. So the HCL Tech probably about 17 times, TCS slightly higher. So the downside from here is very limited. Second, the whole uncertainty in the short term, as the TCS management was talking about, there's an uncertainty in the short term. I think the uncertainty is because about the Fed's direction, whether they will stop raising interest rates or not. With the US inflation print yesterday coming in lower than expected, now there is, again, will be the stock that they might pause. If that happens, some of the discretionary spend for IT companies, which has paused, will again come back alive. And so that's the reason I think the management are all talking about a second half pickup. So I think stocks don't react much on the downside. And as this inflation uncertainty comes down, I think there's sufficient room for earnings revision upwards later in the year.
Right. Chakri, the other thing about, of course, IT aside, the other thing that I also wanted to discuss is, Ajay and I were discussing whether it's goodbye two-wheelers at least for a bit, because this competition that Eicher is now seeing from the Harley Hero combine as well as Bajaj Auto seems to be not going well. While the stock may have, recovered and stopped falling, but brokerage downgrades are still trickling in.
Yes, indeed. Eicher had a very clear product with no real competition in terms of the price points were much higher. With Harley now coming in along with Hero, the costs have come down because it was CKD, no longer CKD. And the price points are very similar to where Eicher is, the Harley Davidsons. So from that perspective, and the Triumph by Bajaj. So these are very credible competitors, global brands, and therefore I think some of the premium multiple to Eicher is likely to erode over time. So yes, the stock has corrected. So therefore so there is some course correction, but I think the premium multiples will come down for Eicher over the coming period.
The other interesting thing is Patanjali Foods. That's going to be an interesting stock to look out for. They've launched their offer for sale now. Promoters are looking to offload about 9% stake, which represents about almost 2.5 crores shares. And in the case of oversubscription, the promoter is planning to sell an additional 2% as well. Ajay, not the first time that they've attempted an OFS.
Well, this is the second OFS which they're doing, and the earlier one, it was supposed to come much earlier. They had a bit of a rap on the knuckles from the regulator as well to do it quickly and comply with the regulations. But interesting point is that an 18% discount is a pretty steep one. I don't remember the last time we saw such a massive discount to any OFS or any block. The other point is how the fundamentals or the performance actually has been over the years. Will there be good takers, willing takers, Chakri, on Patanjali OFS? 7% of the company on offer at 1,000 rupees a piece.
I think that they're actually doing this office. Now the discount makes it kind of more attractive, but Patanjali as a stock is an expensive stock to begin with. But given the size, so I think while the OFS will get filled up, it removes some amount of uncertainty, which has been holding back the stock for quite a bit of time. And therefore, you might see a certain amount of relief that, that overhang on the fundamentals is now gone.
Interesting point is that an 18% discount is a pretty steep one. I don't remember the last time we saw such a massive discount to any OFS or any block. The other point is how the fundamentals or the performance actually has been over the years. Will there be good takers, willing takers, Chakri, on Patanjali OFS? 7% of the company on offer at 1,000 rupees a piece.
I think that they're actually doing this office. Now the discount makes it kind of more attractive, but Patanjali as a stock is an expensive stock to begin with. But given the size, so I think while the OFS will get filled up, it removes some amount of uncertainty, which has been holding back the stock for quite a bit of time. And therefore, you might see a certain amount of relief that, that overhang on the fundamentals is now gone.
The other complex we need to put the spotlight on is the entire market-based stocks. And Angel One would be reporting their numbers today. In the light of how Anand Rathi shot up 30%, almost revenue, asset under management, profits, all of them 30% plus kind of improvement coming there. Angel has come back from making a base of around 1,000. It has come back very sharply because markets have come back. It's a cyclical stock. At current levels, how do you see that stock and the performance because the market has really come back to all-time highs?
Yes, well, I don't cover Angel in particular, but in terms of that space, are likely to see very good revenues in terms of because of the volumes in the market have been markets are at record high, volumes are very strong. Earnings will therefore be very good for all these players. And also, but note, the stocks have all run up in anticipation of all this news. So I think that is the thing. Angel in particular, I'm not unable to take a call.
There's a very interesting data that shows that LIC has actually hiked their stake from 5% to 7%. Look at the stock price in the last 6 months. It has also come back. But still, there are talks that all these agrochemical names may continue to feel pressure because of China dumping. Chakri, do you have a view on Deepak Nitrite?
The stock has underperformed because of the huge amount of pricing pressure because of China dumping, as well as volume slowing down. Plus, they have a capacity expansion coming in, and that capacity expansion is still about a couple of quarters away. And so for those to turn into operating leverage, it requires a demand uptick. And so if you take all this together, I think Deepak Nitrite, in spite of having underperformed quite significantly, I would continue to remain on the sidelines until we see a demand uptick, which is, I think, at least a couple of quarters away.
The other one that you can't or rather couldn't take your eyes off from yesterday was Delta Corp. While Nazara definitely bounced back from the session lows yesterday, Delta, irrespective of being in F&O band, got really thrashed out. The stock on closing was down nearly about 24%. And as we understand, as of July 11th, 7 clients accounted for 25% of the positioning in Delta Corp, and which is why I guess this accelerated selling in Delta Corp and that big short pile up that you saw in trade yesterday. Now, Chakri, I mean, it's unfortunate that there is a 28% GST now without any distinction between skill-based games or money-based games. But is the story over for Delta in that case?
In the near term, clearly there is going to be a lot of uncertainty because, to begin with, these are all niche players. They have a very narrow revenue stream, and that revenue stream, on top of that, if you add a very higher level of tax rate, that impacts profitability significantly, and that's reflected in the stock price, which fell yesterday. So I think Delta Corp, given the current situation, I would continue to stay away and let it figure out the new margin levels that are sustainable for the company going forward after the tax.